Hello Wolfpack, welcome back to another video. Red September, guys, Red September. Now last year, exactly a year ago actually, I made a video on my YouTube channel saying Red September, and we did in fact see a Red September. If we go back to 2021, we can see that Red September was quite prominent. In fact, we dropped down from like 53k all the way down to 39k. And hey, look, probably going to happen again. I mean, all of the data I've seen lines up for a Red September. I'm going to look into that in this video, but essentially this is the chart that goes over the monthly performance of Bitcoin, the monthly returns of Bitcoin. And we can see that the term Red September is actually a thing. It comes from actual data. I guess you could say data trend, which is September is historically the most negative month for Bitcoin in terms of percentage return. We've only seen 2 green Septembers in the entire price history of Bitcoin. We've seen 7 red Septembers and 2 green Septembers. And when we do see a red September, it's generally speaking quite red. And so, look, that's more negative than any other month you can see on Bitcoin. Even March, I think March would be the second most red, maybe January. But generally speaking, it's September that's quite negative for Bitcoin. And seeing as we're going into a red September, or at least what we can perceive to be a red September, what do we have to support that? What is the evidence to suggest we're going to be seeing a red September? Well, there's a multitude of evidence. And I think the first thing we can look into is major events that are happening within the month of September, and that's going to be CPI, the Ethereum merge, and FOMC on the 13th, the 19th, and the 22nd. These are 3 major events, 2 of which are driven by the macro situation, one of which is independent, which is the Ethereum merge. That very well could drive down the price action further. And if we're looking at some of the indicators we use to determine what's going to happen with CPI and FOMC, we can see that the DXY, for example, has actually broken above the all-time high, the recent 20-year high, and it's formed a new 20-year high, which means the CPI, the DXY, is at a high we have not seen for over 20 years. Could be 40 years. Let me actually see real quick. Let me go to the weekly chart, and I'll go to the monthly chart, actually, and we can take a look when was the last time you saw this price level on the DXY. It was in fact 2002. So the highest level on the DXY in 20 years. And then if we're looking at, for example, something like the, let's say the bond yields, which we can bring up right now, 2-year government bond yields, we're seeing highs we haven't seen in the bond yields since 2007 as well, which of course was the last real proper recession. So we've returned to levels that we haven't seen on the DXY since the dot-com bubble, and we haven't seen on the bond yields, on the 2-year bond yield at least, since 2007-2008 recession. We're very much in bad situation for the macro, and we can very much expect rates to continue hiking with that FOMC decision, and we can very much expect potentially CPI to keep going up. Now, oil prices are the only thing that would kind of throw a spanner in the works there. Oil prices, they were going up quite a lot, but they have dropped down recently. But we have actually seen a resistance support flip from a speculative descending wedge formation. So potentially it could be up from here for oil prices. And it is kind of like a rounding formation. So a relatively bullish in my opinion in terms of TA, but obviously TA isn't the only contributing factor to macro scale things like oil. So I would say that, when we do see these decisions come up, these CPI and FOMC, CPI release and FOMC decision, we're going to be seeing quite negative price action on Bitcoin, and that will coincide with the red September or bloody September general trend we have on Bitcoin in terms of monthly returns. Now, the thing about red September itself, and the reason why it's interesting, is because there's nothing really in September that should lead to a trend like this. But what happens is it's a psychological thing, right? So what you see is that, when we see, a trend like that form where everyone's like, oh, it's a red September, we got to sell. We got to sell, we got to get out. Then it's a psychological snowball effect. Although there's no fundamental cause behind like September being red all the time, it's just a snowball effect because people identify a trend, and maybe it was by coincidence, and then they act within that trend. It's like the effect of astrology on the crypto market, right? I use this example very rarely, but I'll use it here. Why does astrology work on cryptocurrency? And you might think I'm being crazy here. Well, it doesn't. It's not because the stars are telling you what the chart's going to do. It's not because the moon is like, just randomly changing the price of Bitcoin. No, that's not really what's happening. What's happening is, essentially, there is a trend that you can perceive, and since enough people believe it, enough people are reacting based on that, and hence it affects the price action. And that makes people think that the stars actually affect the price charts, but in reality, it's just flock mentality. So if everyone thinks it does, they'll act like it does, and then it will. right? So they're kind of thinking it into existence in a weird way. So yeah, psychological effect on the markets are very real. And that's why I think September is going to be a red month. And there's also other reasons for that. I mean, one of my main reasons, of course, is the 4-year cycle theory. Now, 4-year cycle theory is something I've stuck by for a long time. Actually, I've stuck by it since 60K in 2021. In fact, I was actually sticking by it in 2020 and 2021. And look, you might say, well, where was Wolves of Crypto in 2020? It's like, it wasn't on YouTube, but it was there. Telegram, some of my original members might remember. But essentially, this is something that I've stuck by for a long time. And yeah, I had the date range trend a little bit wrong in 2020 and 2021, but now that I've got it precise and got it accurate, I would say that, yeah, as per the 4-year cycle theory, which is kind of like a trend that I've kind of adopted as one of the main trends in this channel, and not many people have drawn it the way I've drawn it, we will be seeing a Q4 bottom. And more specifically, a Q4 bottom would mean we'd have to be seeing a red September, because red September is just before Q4. Now, more specifically than Q4, I narrowed this down in yesterday's video. If you haven't seen that video, go ahead and check it out. We will actually be seeing a bottom likely before December 3rd. Why do I think that? Well, I think that, and I need to delete this chart here and I can draw it up for you now, 1 second. I think that the highest price Bitcoin could possibly bottom out in Q4 would be 17.5K, a retest of below at 17.5K. And given the fact we have this macro downtrending line, eventually that macro downtrending line is going to cross paths with 17.5K, meaning that if we're going to hold that level, we're going to have to break to the upside to confirm the bottom. So the earliest we could bottom out, in my opinion, or the earliest we can bottom out at the latest we can bottom out at the 17.5K level, I should say, would be around October 17th. And the latest we can possibly bottom out on Bitcoin, in my opinion, as per my lowest price target of 11.5K, that's the lowest I think Bitcoin could possibly go. If we bottom out at that lowest point, the latest possible point in time we could bottom out is around, somewhere in December 3rd. I think I had yesterday. It's not perfect in this chart right now, but December 3rd. So, look, I would be expecting Bitcoin to bottom out sometime between October 1st and December 3rd. That's a 2-month time period there. And I think that in order for that to happen, given the events that are lining up in September, I think that seeing a red September would be very, very likely. And that's not really my opinion. It's kind of just objectively true. I mean, we've just lost, I suppose it is my opinion, I can't say that, but it is based on a lot of objective truths. We've just lost a 11 year trend line on Bitcoin, this pink line from May 2011 through to 2015 through to 2018. We've just lost that. That's fresh. We've lost it. We're resistance support flipping from it now. We've failed to break back above on the way up. We can expect to go down after seeing something like that. We've got major events happening within September. We're heading closer and closer towards a downtrending line that we're going to be needing to either break or reject from. And on top of all this, we've just seen a rejection on the RSI. The S&P 500 is rejected as well from recent resistance. Yes, it's finding support right now, but there's no guarantee that support will hold. Maybe it'll hold for a few days or maybe even a week, but past that point, it's looking very rough. A lot of volatility is going to be coming in from these events, and we're just going to have to act accordingly. Now, one thing I would say about the downtrending line on Bitcoin, the one that I've just drawn up there, that is very prominent that you need to be looking at, is that you can actually, do a lot of the analysis on this line from the 3-day chart and use the RSI, because what happens with RSI, right? This is a thing with TA, right? So essentially, when you form a downtrending resistance line or an uptrending support line or whatever it is, diagonal resistance to support line, you generally form the same thing on the RSI. But when the RSI breaks to the upside, generally speaking, it means that the price hasn't broken the actual line to the upside yet. So the RSI acts as like a pre-signal. So if we break this line to the upside on the RSI, you can be pretty certain we'll break the actual price line to the upside. So watch the RSI and you might be able to get in a little bit early on that trade. As you can see, for example, the RSI rejected from its resistance line and Bitcoin didn't even touch it yet, right? And that's how we knew, that's one of the reasons we knew that the top was in on that local rally, because the RSI rejected. It didn't matter what the price is doing, the RSI had rejected. RSI is very useful for forming those long-term downtrending resistance and uptrending support lines and using them to your advantage to predict where the price action is going next. So I'd recommend keeping an eye on the RSI. But I suppose that's just the main points of the video, right? And I want to talk about one more thing before we end it, but I will just clarify. Yeah, look, red September seems incredibly likely to me. And I think the bottom will be anywhere between October 1st and December 3rd. I made that clear in yesterday's video. Previously, I was saying just Q4. Now I'm narrowing that prediction down a little bit. I'm making it more precise. And as we get closer and closer and closer, I'll be able to narrow it down even further. And I think we have a pretty decent chance here, guys, of catching very close to the bottom on Bitcoin. I don't think it's in yet. I think at a bare minimum, we'll be seeing 17.5K. My buying plan on Bitcoin has been made abundantly clear. My buying plan on Bitcoin is essentially this. I will be buying Bitcoin 50% at 17.5K, roughly, and then the other 50% at this region between 14K and 12K. Or if we don't reach that point, which is possible because we could bottom at 17.5K, I'd buy the rest at the trend reversal, which in my opinion would be a break above this downtrending macro line. I'm aiming for an average price of Bitcoin at around 15 to 16K. Worst case scenario, if we bottom at 17.5K and then break the macro lines to the upside, I'll have an average price of like 19K, and I'm very happy with that. Now look, one thing I'd like to say, I think a lot of people get confused about this kind of thing. They say, well, Wolf, if you think Bitcoin's going to bottom out in October to December, what about the S&P? Because they think that the S&P is going to go down further, right? They think it's going to go down for longer, which, it's not an irrational thing to think. What I would say is that don't be overly bearish on the S&P 500, okay? Yes, we are in a recession, of course. However, financial markets act first. They don't wait for people's economic situations to look better, right? Why do you think the S&P 500 started correcting in January when the first rate hike was only in March, okay? There's a reason for that. It corrected 2 months early. 2 months before rate hike started, the S&P was correcting. It's because the S&P 500, the traditional markets in general, they predict the future. They don't act with the present. They predict the future. And so it is likely that we will be seeing the bottom on the S&P and the bottom on the traditional markets before we see the bottom on the top on the macro situation, right? Very important. The S&P, I'll say it one more time, the traditional markets, they predict the future. The macro situation will still look bad when the bottom is in for the S&P 500. That is a fact. So to say that, Bitcoin can't bottom out because the S&P is not bottomed out yet, it doesn't make sense, okay? And even expanding on that further, well, if you look at when Bitcoin topped out, right? Bitcoin topped out in November, the middle of November, right? The S&P 500 was still in an uptrend in the middle of November, right? We actually topped out in the S&P in January. So to act like these things are perfectly connected is illogical. The S&P 500 does not need to bottom out for Bitcoin to bottom out. It would help, but it's not a necessity. And we've seen that as the bull market top, right? We didn't top out when the S&P topped out. We topped out before. In fact, by the time the S&P 500 topped out, Bitcoin was down 50%. So don't act like, I'm not getting aggressive. I'm just saying, I think it's a very common misconception that needs to be corrected. Don't act like these things have to move together. They literally do not. I mean, there's so much evidence to prove that. All you need to do is look at a chart, right? Yes, they are connected, but they do not move together, right? So the Bitcoin can 100% and probably will bottom out a lot before the S&P 500. So that's something is worth clarifying there. But yeah. If you're interested in becoming a VIP member with the Wolves of Crypto YouTube channel, you can go to my YouTube homepage and you can click on the join button. This will open up a tab that shows you all of the perks you get for becoming a VIP. I'll quickly go through them now. There's 4 trading setups per week in spot and short positions, which is the main thing that people join for. Additionally, you've got prioritized reply to comments, meaning I will prioritize replying to your comments over people who are the free subscribers, the free channel members, because obviously as the channel grows, there's going to be more and more comments. I'm not going to be able to get back to all of them. And so the VIP members, I will prioritize getting back to first. We've got a 2-hour lecture on market psychology, which many people have said to me is the most valuable video I have made. And then we've also got exclusive Telegram group access, where you gain access to a Telegram group in which VIP members share charts and discuss trading strategies and ideas and the signals that I post into the VIP group as well. All of that is just 40 AUD a month, which works out to be around 28 USD a month. If you're looking for an exchange to use for cryptocurrency trading and you're sick of your current exchange, or you're just looking for a better exchange, I'd highly recommend you sign up to the BitGet Exchange. There's many reasons for that. The first reason being it's non-KYC, which means it lines up with the fundamental values of cryptocurrency, decentralization on your end, which is perfect. It's also got 5 times lower fees than Binance, which is insanely cheap, which means you'll be saving a massive amount of money by trading on this exchange, which of course is one of your main intentions. On top of that, so it's 5 times less fees than Binance, it's decentralized, and on top of that, not your keys, not your crypto, that's not really a massive problem with this exchange because they've got a protection fund, which they've dedicated 6,000 Bitcoin and over $100 million US into that protection fund in order to secure the funds of the users. Meaning, if something happens on the exchange and you lose your funds, it's not guaranteed, but there's a very good chance that you'll be able to recover those funds through use of the exchange's protection fund. And the last thing as well is if you sign up using my referral link, which by the way would support the channel, I'd highly recommend you do that, which you can find in the description below. If you sign up using my referral link, you can gain access to a reward center as well and gain access to over 4,000 USD in rewards by completing various tasks. So lastly, I'll just say it again, please sign up using my referral link. It takes 5 minutes and it helps out the channel a lot. Thanks, guys. I'd also like to give a quick shout out to the Crypto Academy. This is a course developed by myself and Megawell Crypto. We're teaching people how to trade. Become a trader. A 10-unit course is, like the title, a 10-unit course that teaches people how to become traders. We teach people how to analyze charts. We teach people how to take profitable trades, how to master TA, whatever it may be. You can go on the website and you can read a bit about this, but ultimately I'll give you a quick rundown. 10 units, starting from fundamental cryptocurrency concepts, going through to technical analysis, going through to market patterns, indicators, candlestick formations, profitable mindsets and psychology, and then finally how to find trades. We've got about 450 slides, 80 videos, 8 worksheets, and a trading diary, which means we're targeting all of the core psychological groups of how to learn things, right? We've got visual learners, we've got verbal learners, we've got people who learn using practical skills like practice. We've got many different things there. We're targeting all those groups. We've also done an extensive market analysis on what TA courses are currently available. And we can tell you right now, for the price you're paying for this course, and in general, this is the most extensive course you will find that finds all of the information relevant to teach you how to trade, gives you lifetime access after a one-time payment. So if you're interested in finding out more about the course, go ahead and email cryptoacademycourses@gmail.com and we'll get back to you with all the relevant information. Thanks for watching. Hope you enjoyed, and I'll catch you in the next one. Bye.